Welcome. For our self-study participants, you do have to watch at least 15 minutes of this program for 1 credit. You have to watch at least 100 minutes for 2 credits, and you do have to take and pass the quiz at the end of the program. It is located next to the volume button in the handouts tab. That is it for me. I'm going to send it over to Mr. Agostino. You guys have a great webinar. Thank you.
Good afternoon, everyone. And let's see. The first slide. Okay. So today's topic is 7508A and what you've seen on the internet called Kwong and Abdo, based on the 2 cases that have come out recently. Before we begin the presentation, we need to thank Tax Practice Pro and John Shealy for allowing us to do this and putting this together. There's been a lot on the internet. There's a lot of product out there. There's a lot of advice. There's a lot of different ways people are doing computations to tell you what this Kwong and Abdo message is. So before we go on, this is my opinions only. I've done the research, but I'm not representing anyone. You're going to see, I'm going to tell you about certain products that you can purchase, or they're available on the internet. I am not recommending any of the products. I've got slides and reviewing the different products and how they work. And my overall comment is that most of the products do provide you with a computation that, unless you are really fast with pen and ink, like Shane, that you will be better off with a computer program with an AI component that can crunch these numbers for you and prepare these claims. Right? Also, and everyone keeps telling me this, there is a deadline. That deadline is July 10th, 2026 for filing these claims. So we don't have a lot of time, and the time is important because if you read the materials that are out there, there's about $320 billion at stake, and maybe perhaps over 1 million taxpayers who might be eligible for these refunds. So if you thought that your tax season was busy, get ready. And why did this all start? This all starts because of 2 federal court decisions that have come out recently, not that recently now, that interpret Section 7508A differently than the IRS had interpreted it originally, and how most of the taxpayers were interpreting a regulation. So the 2 federal cases are Kwong and Abdo. I'm going to talk a little bit about them today. But what you got to remember from those cases is there is a COVID disaster area period, January 20th, 2020 through July 10th, 2023, where there are opportunities for interest and penalty abatement and refunds. The refund statute is going to expire on July 10th, 2026. So if you're going to apply for these refunds, they need to be filed by July 10th, 2026. The jury's out as to how they're going to apply in CPP, but for these refund claims, most of the commentators agree. July 10th, 2026. Okay. Now, let's talk about the legal underpinnings. There is a statute. We all have an Internal Revenue Code in our office someplace, or a link to an online version. So you have to go back to the 2019 version because this statute's been amended. And let's look at what it said in 2019. Remember where we were. We're in the middle of COVID. There is a perception that the Internal Revenue Service is going to help get us through the crisis. There were affirmative things that the IRS was doing. The ERC, they were sending you money. The PPP loans. And less discussed is, hey, if we're going to be sending you all this money, we shouldn't be penalizing honest taxpayers who are damaged by this COVID disaster with interest and penalties. So 7508A, that is a statute that applies in disasters, says that in the case of a qualified taxpayer, right, most individuals, corporations, that the limitation period, the deadlines, shall be disregarded in the manner specified under subsection A. We're going to go with the subsection A. The secretary shall cause to be disregarded any interest, penalty, additional amount, or addition to tax for failure to pay tax. When you read it in context, oh my God, that says, if you look at a transcript and there's any interest or penalty in that qualified period that we just discussed, it should come off. And then if that comes off, the interest that was accrued, remember the IRS charges interest and on interest, that should come off. And the interest on the penalty, that should come off. So they're interrelated computations. And the reason I tell you that is it's not as easy as going to the transcript and just taking those numbers and wiping them away. Right? So what slide 1 lets you know is we know what the disaster period is, 1,268 days of interest gets wiped off, and the penalties assessed during that time, right? So that's in the 2019 version of the statute. So next, Abdo, tax court says, this isn't discretionary. This is mandatory. The words that were used by Congress says the IRS doesn't have a choice. They can't say, hey, were you damaged by COVID? Someone else was not damaged by COVID. We all get it, whether we were hurt by COVID or not. If you owed money during this period of time, they can't charge you interest on it. If you owed money on this period of time, you paid late, they can't charge you penalties on it. And a good reading of it is whether if on all of these information returns, they can't charge you penalties. Now that is one of the disputes, right? Because one of the things that when we look at these transcripts, we see the penalties were applied for failure to file these international forms with your return, right? You know that your 5471s or your 3520s. There's one school of thought that when Congress said no penalty, they meant no penalty. And then all those come off. So what Abdo didn't decide is, again, how all of this interest and penalty limits that we talked about are there. They just said the statute uses plain language. Plain language is mandatory. Then, so that case one. So that starts everybody thinking, what's going on, right? And we should have all been raising it in CDP, and a lot of us did. And there's a case right now where the IRS is saying, it's one of our cases, where they say, if you forgot to raise it in CDP during the time, you waived it, and you can't have it now. And we're saying that seems to be contrary to the IRS's the view that this is mandatory, that you don't have to waive it, raise it. The IRS should just be doing it. So that's being litigated right now. But the one reading about though is that you can raise it at any time before the statute goes, because this is a mandatory suspension of interest during COVID, no different than other relief that taxpayers were entitled to, whether it was ERC, PPP. If you qualify, you're entitled. So next we go to Kwong. That it applies to the whole period and applies to all the penalties. So that's why now you're seeing all these infomercials of people telling you if you're entitled to all this money. And I'm going to go through at least 6 products that are out there that help you do these computations right now. But between Kwong and Abdo, they've looked at that whole period and they've said you're entitled to 1,268 days versus the government's regulation said no, there's a limit of 1 year on it. And we all know this year, Wilbur Bright said, hey, if it's not in the statute, then the government can't, by regulation, take away what Congress gave you, right? The government is the executive branch. Congress is the legislative branch. They make the laws. IRS, right? Executive branch doesn't make the law, it enforces the law. So the limitations that the executive branch, that Treasury tried to put in by regulation, is void under Wilbur Bright. So there's not a 360-day limit on this interest and penalty abatement, that you're entitled to 1,268 days of interest and penalty abatement. That's where the big numbers start, right? And, so what is settled, right? That it's mandatory. We know what the disaster period is. What we do is persuasive is that everything that even was owed before that date was suspended for those 40 years. So it's not only what accrued during COVID. I mean, that was assessed. It was what was due before COVID and unpaid, that we just got a straight blanket interest assessment. So if you owed interest from 2009, tax from 2009, and it was still unpaid, you still get that pause, even though you owed that money before COVID. And then the real question is going to be is, does it wipe out all penalties, right? Where the statute seems to say all penalties. The government says, no, it's just penalties related to the failure to pay tax, the failure to pay penalty, not all the penalties. And that's where the big money is in these cases. Because let's look at what penalties could come away. Negligence penalty, 20%. Right? All these international penalties. The language of statute that I read to you before said all tax, all penalties. So did Congress really mean for the disaster, just for the disaster area, or for failure to pay? Or what about the conduct-based penalties? A government saying, no, it's just a failure to pay, people who were hurt by COVID. But the plain language lobby is saying, well, that's not what Congress said. Congress said all penalties. So, and that's what in this seminar I call the protective language, right? I'm not going to take a position yet. We're litigating all of this. But one of the things you say is if it's arguable and the statute seems to support it, and it's a claim for refund, which the government can allow in whole or in part, then why not request anything that you have a reasonable basis for, as long as you disclose the reasonable basis for it. So the examples that I've given you, and those of you who have tested out the AI prompts will know that you can set the prompt to produce the conservative calculation and an 843 with the most conservative, or you can ask for the most aggressive calculation. And it's up to your professional opinion which you do for your client. And I would look at it on a facts and circumstance. And I would also be ready for the IRS to deny most of these. Legislative update going forward after December 26, 2025. This has been fixed, but it's not fixed retroactively. So don't let the IRS tell you that, hey, we changed that statute. You can't have this money. The fix is not retroactive. So this is still out there. So the date that you need to remember is the July 10th, 2026 date. So now, how do we figure out which of our clients is entitled? Because it's not just the people that we represented during COVID. What about all those collections? We're told that there were 20 million cases in the collection division. So does that mean that there were 20 million taxpayers who should have gotten interest suspension for the period of 1,268 days? And if that is true, then the numbers that you're reading, if you listen to one of the great videos out there is Alyssa Watley's video, right? Where there's $320 billion owed to. The government is taking 300, or at least charging people $320 billion that they're not entitled to. So that it's our job to figure out which of our clients are entitled to this benefit. All right. So virtually everybody. All right. So individuals, at least for the years 2019 to 2022. Corporations with fiscal years that are within the window, right? Because it's a window. Corporations can have fiscal years. Partnerships and corporations, to the extent, even though they don't pay tax, they got the penalties that were accrued. Payroll taxes are included, right? When we read that statute, did it say income tax? It said tax. It said penalty. It said interest. Didn't say payroll. Didn't say excise. So the plain language suggests all tax, penalty, and interest is eligible. Right? And that's where, and then when we get more aggressive, well, does that also mean the international information returns, the 5471s, the 5472s? Are they returns? Well, the IRS gives you a penalty for not filing it. And the penalty is for failure to file and or failure to pay. So there's a good argument to be made that this includes all the international information return penalties. So how do we figure all this out? Step one, you need the IRS's file. You won't know, did they charge you the interest or not? Did they assess a penalty or not? So you're going to, and all of the work that we do is going to be based on the transcripts of account and any other documents that they have, right? So first, in every one of these cases, they come to you, we're going to do the FOIA and we're going to do the transcript request. Why? Because when you do a claim, you get one bite at the apple. So even though we're looking at these Kwong Abdo claims, if there's other issues that would provide for the abatement of these penalties, like failure to comply with 6751B, we need to apply it then. So that's why I'm telling you, step one, boy, do your due diligence. What is at issue? What penalties were assessed and why? Can the government prove they're entitled to? Two, looking at the transcripts, the transcript codes that I think wipes out are the 166, I put them all, the failure to file penalty, but then the miscellaneous penalty, the interest and the interest on the penalty, and the collection fees. I think all of those are fair game for your thing, which is great. You get your plain language transcripts, and we all have programs that get transcripts for us, right? I use THS, but there's IRS Solutions. There's lots of programs, or you can get them for free using IRS Get Transcript. And many of these programs now that we're going to talk about today, the taxpayer or you on behalf of the taxpayer, you just put in the Social Security number, it prepares the 8821, and it downloads all the transcripts for you. So to make it even easy for you to do. So I'm looking at, in all of these cases, I'm looking at the Kwong Abdo issue and these penalty codes, and I'm looking to make sure that 6751B was complied with, because we found during COVID, they missed a lot of it. Why? Because you got to have the employee sign and you got to have a manager sign. And people were working from home. And even though you could DocuSign this stuff, it didn't happen. I don't know if you saw, there was one case recently where the government conceded millions of dollars because they backdated the 6751B memos during COVID, all right, HEATE. So everybody was crushed during COVID. The government gave relief, and no one at the IRS was authorized to cut corners to avoid that relief. Not that anyone did anything wrong. Everybody was trying to do their job during a difficult time. But we live under the Taxpayer Bill of Rights, where the taxpayer only pays the correct tax. All right. There's software. I keep telling you there is software. And I just sent out things about the different software programs. Again, I am not recommending any one program over the other. What I'm telling you is, if you are not really fast, this makes the process of doing these computations much faster. I mean, with the software, it should not take anybody more than an hour to do a claim. Did you hear that, Mr. Associates in the back? You have 1 hour to get a claim done.
So tax help software can do it without the FOIA claim?
It can if you go through the instructions. Right? Because it gives you the, I'm going to go through, if you read the, so with this, there was an article that follows this, right? So everyone who's here today should have received slides, the article, and then this morning, I sent out something called How to Compute the Claims, and actually walk you through how to do it with each of the programs. Because there is no reason why anyone listening to this seminar shouldn't be able to do a claim for a client in a very short period of time. Right. So TaxHelp software, that's a little bit more manual. They got the beautiful thing about the way TaxHelp software does it. It went through all my clients and gave me a report of which client, because I don't generally delete the 2848s until the case is done. So it went and gave me a report of every client where there is an opportunity for a refund, and it calculated the refund. So it makes it easy to know who to email. The clients you deleted from the system because you and close the file. You're gonna maybe need to go back manually or send out some mass mails. All right. Second product that came out is Tax Refunds AI. I think it's got another name now. I will check. That's Alyssa Watley's program. It does everything. You put the information in. This program is primarily for the end user consumers. It was $50. It's now $79. So for that, it actually gets the transcript, does the computation, prepares the 843. All you need to do is sign it. Even for $79, are you kidding? Then there's another program, Penalty Back Now. It's very similar to the prompt that we did. The beauty of this program is it is nothing up front. It's a pure contingency. If you don't get anything, they don't get anything. So they're processing all the papers. And they have an affiliate program so that there's some type of income or revenue sharing with tax pros. So you get a little site. It looks like you're the front page. They do all the back office and Penalty Back Now. IRS Solutions is a competitor to Tax Help Software. Again, different program. I just heard from the owner, gave me a sample to try out. Nice looking program. We all use tax value, tax interest to verify interest comps. That's a little bit more cumbersome, but you know how to do that. And then there's a program I have to put in, it's Chuck Reddick recommended. And it's the name off the top of my head, but it is in the slide deck that I sent you this morning. He got me the stuff at the last minute, so it didn't make it into the deck that you have for yesterday. And it's done, so I forget, I'm trying to find the name. Drake also has a calculator, irscalculators.com. You can also do tax tool CFS. Again, you just have to use the information and the step-by-step making the program do it. So, but there are lots of programs out there. So there's no reason for someone to say, this is too hard to do. Okay. Statute of limitations. Okay. Congress, all of them were suspended during the COVID period. Doesn't mean they were extended, right? It's suspended. So 19, 20, 21, and 22 all have the same July 10th program. Because once the statute starts running again, it starts running again. So that's why the deadline for all of these years is July 10th, 2026. Right? And that is the trap. And one of the traps is if you paid after July 2026, 2023, right? Then you don't get any extension time because it's after the suspension period ended, right? There's no more, you were no longer in the disaster area, and now your regular statutes apply. So if you're going to do anything for your clients and you're going to try to collect this $320 billion, you have to do it by July 10th, 2026. So this, for some firms, is going to be worse than taxes. How do you do the 843? Right? The 843 and the one-shot rule. Legal authority. That's 7508A, Abdo, and Kwong. We know the cases. It's in the article. It's in the slides. The facts, you can take all the facts from the transcripts. Unless we're arguing on things like 6751B or a statute expired during the suspension period, because the suspension period only goes one way. It helps the taxpayer. Didn't keep the statutes open for the IRS. So things that expired during the statute, the the disaster period are gone. But you got to raise that as well. So you do your computation, and again, we're going to go through these different ways to do the computation. You ask for your dollar amount of your refund, and you state your protective claim, right? I'm asking for penalties. I'm telling them that I understand that it's an open issue. This is a protective claim. If the law comes out my way, my client wants their money. To make sure that we file for it within the statute. That's why it's a protective claim. Make sure that they got it. The mail is horrible right now. There's no way to upload these, right? To use the document uploader. It's a certified mail. Plead everything, right? One bite at the apple. This is a measure twice, cut once exercise, right? There's something called the doctrine of variance. If you forget it, you waived it, right? Because the government can only respond to refund claims to what you've asserted. They can't respond to what you didn't assert. All right. So when does this, now there's programs, and I sent you guys for that are good with AI, a program that'll do all of this for you. Right? And what we did is the articles are the prompts. You don't need to know how to prompt. What you need to know is how to upload the articles, because the articles are written as prompts. So it tells the AI programs what to do. I recommend that everybody stress test the comps by putting it in one AI and having another AI check it. That's called stress testing the prompt, to make sure if they both get to the same number, you're probably in the right place. And if they don't, then you work on how to get to the right number. So you've got the prompt. Tax refunds AI does it. Penalty back does it. They all prepare sample 843s for you. So if you're not used to doing it, you may want to use a software program to do this for you. And the others are that. Again, when I talked about two, I'm not recommending anyone over the other, even though some of these people are my friends. Like, I love THS and Roger Nemeth. I think they do a great product. I love what Alyssa Watley is doing out there, and all of her software is great. But all this other software that I've tested, these people who were nice enough to send me samples of their program to test to do this seminar, they're great too. I mean, I'm shocked that they were able to write this kind of software in this much of time. So all of you guys out there, great job. One question from the audience, yes.
Does Form 843 actually have to be used, or can you just draft a request for refund?
You have to use an 843. Whenever the IRS gives you a form to use, don't do something different. Right? $320 billion, maybe 20 million taxpayers. If they tell you the form should be pink, go get a printer that prints pink. Yes.
Hey, there's one question at home, and if you answered this out, you don't need to answer it again. Larry Sanacandro asks, why does the date run from July 10th or to July 10th, 2026? Why not 3 years from the date the return was due, 2 years from the date the refund tax was paid?
Again, that's how we interpreted the statute, right? That there was, the suspension was the 1,268 days, plus that includes the 60 days. And so you looked at when the suspension period ended, all the returns that were due in that time were postponed to that date, and then you just went forward.
Because that's what the law says now about any natural disaster, right?
Yeah.
Standardized it. So we had a federal natural disaster ends in May, 60 days, they have to give 60 days notice to end it. I'm sorry, ended in March. 60 days got us till May with it. So it ends in May with 60-day statutory deadline for filing. Is that how we get there?
For the 2025 statute. Yeah.
Okay.
So that's why, I think all of us have said that July 10th is the date. So it was torture to get there, to get everybody to agree. Why are we using the 843? That was, again, John Zandy's question. Again, that's how you claim a refund. And most of these cases are claims for refund or claims for abatement. So that's why the AI works. But again, all of these programs work. I'm surprised. I was going to say, Drake, now you can do it on Drake. You can do it on many of these other programs that compute interest. So all you got to do, any program that does IRS interest, you just stop and start the dates because of the beginning and the end of the suspension period. And what you need to watch when you do that is the interrelated computation of the interest on the interest. Because some of the programs just take out the interest and then forget that the IRS accrued interest on interest during that period. Rules to remember: variance doctrine, a refund suit can only go forward on the claims that are in the 843. Res judicata, every tax year is a single cause of action, and that what appeals is arguing that if you had the 843 and it was denied, that was a prior opportunity, so that if there's still tax due and you're in CDP, they will not consider the Kwong challenge. We had that again yesterday in tax court, and our contention is that this is a verification challenge. That did the IRS correctly apply 7508A, and that in CDP, it's not subject to the prior opportunity limitation. So that is pending in one of the cases from yesterday's calendar call, and one of the cases that we're pending in the office. And everyone else has them. There's a lot of these cases. But things to remember is measure twice, cut once. Right? We're all anticipating a settlement program. So measure twice, cut once. Right. Circular 230 and 6670. All right. If people say, well, I could just file a refund claim, it's not like a return, the IRS could deny it. There must be a reasonable basis for every refund position that you sign as a tax professional. There is actually a penalty that was imposed by the PATH Act on excessive refund claims. So when deciding whether to go conservative or regressive, meet the reasonable basis standard. Disclose what you are doing. Label your claims. Don't take the position that every penalty from the beginning of time, even outside the Kwong period or after the Kwong period. I've seen claims that people have filed that said that everything is gone because of 7508. You IRS, you need to compute what the right penalty is. We don't. Don't do that. Again, there are rules of ethics. There is Circular 230. There are penalties. We don't want another ERC disaster. People said, oh, this is free money from the government. Right? The ERC disaster didn't work out well for the people who are going to jail, right? Or the people who are getting all of these penalties, or people who are being sued now for the refund. Let's not do the same thing with these Kwong and Abdo claims. I mean, we're going to be flooded in the next couple of weeks. We're going to be flooding the IRS with claims. Think of all the tax shelter that had decisions that were decided during this period of time and that have potential interest penalties and abatements. I mean, we've worked on one claim right now where the potential refund, if we're right, is $36 million. So more than anything, when it's COVID and you're asking for money from the government, be a serious tax professional. Right. What happens afterwards? All right, we've got $300 billion out there. you're seeing, like ERC, websites popping up where all a taxpayer needs to do is put in their social security number. The website downloads everything else. Some of the websites are paying affiliates percentages of the refund for the referrals. So you have to anticipate that some of these claims, the IRS is going to say no. Where do we go from there? All right. And we all know it's going to be appeals, and it's going to be a lot of these. It's going to be CDP. The first bunch of cases we've seen are everybody who owes money wants some penalty relief and interest suspension because they owe money. So the first set of cases that we saw were CDP cases. We're still filing the 843 in all of those cases because you want to say that the claim for abatement was made within the proper period. The government is starting to deny claims. At first, we thought they were going to be granting more of these claims. They're starting to deny some claims. And you have to find a protest. And there is in the article what the scale is for the protest, the shell, because everybody's going to be writing the same explanation. 7508A, Kwong Abdo, you're going to plug in the dates from the transcript. You're going to say it's mandatory based on Kwong, and you're going to go, and it's either going to be, it's going to sit there where you're going to need to file a refund, well, wait for denial, file a refund claim, or you'll settle in appeals. But there will be appeals and denials of the claims. Right, and again, in the tax court rules, remember, it should be 261 if it's a tax court proceeding, 281 if it's a separate proceeding where the tax court has jurisdiction over the interest suspension. John, you have a question?
If you sue in tax court for the interest, does it become res judicata on the penalties? Because you can only bring up interest in tax court.
You've already, by the time you're going interest under, you're thinking 261, the decision document's already been entered for the penalties.
281, if you're bringing the
281 is just a separate, the court doesn't have jurisdiction over the penalties.
So then if you bring up
That should have been done in a separate action.
because the hope is you could bring up the interest in tax court, and then maybe they'll just do it on the penalties too, and you can make it right about district court.
Hope springs eternal. I'm a very positive person. Maybe if you think it and manifest it, Irene will give up today. But just getting the penalty refunded without making a claim, maybe Irene will give up today.
So for district court, it has to be sizable.
Again, you file your claims. Whether you go forward or not, that depends. But you can use the Court of Federal Claims. It has a kind of, one, it has a pro bono bar. Two, it has a streamlined procedure. Is it as easy as the tax court? No. But there's also pending discussions about legislation to put all these refund claims in the tax court. So am I going to say, hey, don't file? I don't have a crystal ball. I'd say you are the tax professional. You see the client's claim, you give them their options. There are all these people that are doing it on a contingent fee basis. If you can't make it work under your method of getting it done, talk to some of these people that are doing it with contingent fees. I mean, some of them are taking claims as low as $10,000. Right. Again, CDP case, you can't go for the refund in CDP. Right. And that's one of the answers to your question is if it is a refund case that CDP is not going to work. CDP is not a backdoor to the refund. It's not a backdoor to the refund in the tax court. So there are going to be cases where you don't have another choice. You're going to go refund route. And then you're going to evaluate the procedures and the costs in the district court. You're going to evaluate the Court of Federal Claims, and you're going to hope that Congress passes a fix that gives the tax court at least concurrent jurisdiction over these small refund claims. Okay. So again, the IRS is arguing that this is a challenge to the liability. When you're challenging the penalty, when you're challenging the interest, the IRS says there are separate work streams that cover that they shouldn't be addressed in CDP if there's been a prior opportunity. We are arguing, it has not been decided yet, but there is a case pending in front of Judge Lauber where we are arguing that it is a verification claim so that the IRS failed to comply with 7508A when they sent you that bill that gave you jurisdiction for the CDP that included interest that should have been suspended, and that is not subject to the prior opportunity bar. And again, I put in red. That's not what I'm saying is my position. What we've argued in the case, the IRS's position in the case is clear. No prior, you had a prior opportunity, you can't challenge the merits, period, end of story, right? Then, so the other lane is interest abatement. You can still, we think, as long as you meet the net worth requirements, right, you can still bring your interest abatement claim, and that's not subject to the prior opportunity bar. Even Green to Pay and its progeny recognized that interest abatement is different than CDP. So again, file your 843s. Hopefully we'll get one-stop shopping when we get to appeals, that the interest abatement claim and the CDP and the refund claims all go to the same appeals officer. We can all hope. Again, though, if you want your CDP, don't pay it in full, right? Leave some balance due to keep the jurisdiction. I keep putting the Zuck offset in there because I get on. We had Zuck, it was one of our cases that we did a lot of work and it got booted out after almost trial because the IRS was able to offset a refund. So be cognizant of the fact that IRS still has offset powers to collect amounts that you're saying should be abated under Kwong or refunded. And then you may have to start all over. Again, a case from yesterday. Can you argue this in the tax court, in CDP? There was at least one late petition that was arguing this the Kwong statutes, but it was filed late. So they're arguing equitable tolling and the Kwong. You know, again, so you need to know if you're doing this equitable tolling, does the Kwong, the government not doing what it's supposed to do, affect the equities for equitable tolling? Did the taxpayer diligently pursue his or her rights once they knew about it? I guess it's after Kwong or Abdo was decided. And that, I think yesterday's case settled, but just know that that's something that you're seeing in calendar pulse. Right. Federal court litigation. The refund suit path. You file your 843, you wait 6 months, or you're going to get your denial letter, and you have to file your lawsuit within 2 years of the denial. So we can wait a little while for the global settlement that everyone's hoping Congress does. Forum selection, you've got jury trials in the district court, but that's more expensive. You've got non-jury trials in the Court of Federal Claims. That is generally less expensive. I think, again, those who are going to the Court of Federal Claims, because there are not a lot of different facts in these cases, it would appear that once they decide a couple, you're going to know whether or not you want to file all your claims in the Court of all your cases in the Court of Federal Claims, because since it is a court without a jury, and they're going to decide these issues of law, that perhaps when they decide the case, that you're going to know that's going to be the answer, and that's what people are hoping based on Kwong. Pending litigation, we all should be covering. Kwong, they're still talking settlement. There's class actions, right? Remember, I gave you that $10,000 limit, like people are taking cases or not taking cases. There's these class actions. It's really interesting, but how do you bring a class action in tax, right? Because every tax return is different. Facts and circumstances are different. The aggressiveness or non-aggressiveness of the claims are different. So there's something called the Little Tucker Act. Most of these class actions are Little Tucker Act cases where the amount of dispute is $10,000 or less. So if you've got small cases, you want to find out, and I was going to do it for purposes of the seminar, there'll be a follow-up on how to join these classes. If you need to join, are they opt-in or opt-out classes? Because if you've got clients with small cases, the 10,000 or less, you may just want to get them included in the resolution of the class actions that are being litigated now. And so that should help. I mean, we don't really see a lot of class actions in tax, but this affects enough people that people are investing the money to do it. And there's also statutes and fixes being talked about in this area. So you're going to have to track pending litigation for our clients and these class actions. I mean, the class actions and how they come out are going to go past July 10th. And if there's an extension, right, there's a talk of doing an extension of the July 10th for about 120 days so that everyone's not destroyed. If that gets passed, then we'll be talking about this for a lot longer than I wanted to talk about it. So what is your action plan? First question for the audience in the room: is the food good?
Yeah.
All right.
Yes, free, man.
No, we never have a seminar without eating.
Hey, what?
Yes.
Our saying in Patterson was eat and cross.
Right? Eat and cross. That's the CID. The CID mantra, eat and cross. All right. So again, going forward, this is just my recommended action plan on how to create a workflow here. I think we're going to be inundated with work, especially all of us could be inundated with work. So anyone who's got a collection practice is going to look at your old files. Anyone who has TEPRA partnerships, that these listed transactions, that there are assessments during that period, has big opportunities for abatements. So what's our action plan? So step one is you file the FOIA. What does the government have in the file? Because I said, you look at everything once. And there, I think John said, keep going. Okay. So you're going to look at your FOIAs. You're going to look for your 6751B memos. I published an article yesterday. You're going to look at your statute extensions. There's some issues that you should be looking at from there. You get your account transcripts, because that's where we get all those codes that are subject to the abatement. So
free way, you have the client get it, www.irs.gov, get transcripts, but you're only going to get transcripts that way that have balances due. And these are refund claims. So just you may need to file the FOIA anyway, or use one of the services that get the transcripts, like IRS Solutions, THS, and others, or use one of these third-party providers that are doing this work for you. Identify the penalties and interest in the disaster window. Back out TC 161s so that you don't double count your claim. The TC 161 is some of these penalties the IRS abated on their own. Some of the interest the IRS has abated on their own. So you see the section where I talked about TC 161. Don't overstate your claim. Back out what they've already abated. Confirm your disaster area qualification, again, virtually automatic. Now it's calculating the recoverable amounts. We're going to go through that. The second set of slides goes through it, whether you use an AI verification or you use a traditional manual verification. You need to double check your calc and see, which of the positions. Are we taking the most conservative position? Are we taking the most aggressive position? What kind of disclosure do you need to do if you go aggressive, and what kind of reasonable cost? That then goes into your drafting of your 843 and how you get your calculations, file them by certified mail, diary your responses. If you get your 105C, file your protests within the 30 days. If you're getting your collection notices, then you do your CDPs. Try to raise these issues in CDP. Look, as long as it doesn't abate the tax down to zero, then there is CDP jurisdiction. All right. And then look to see if your state has a parallel claim. I practice in New York and New Jersey, so if you look at the article, we dealt with what you do with respect to your New York and New Jersey claims, because some of the states don't recognize the suspension. Some of the states do recognize the suspension. So you make sure that you're not leaving any of your clients' money on the table. So that is how I'm trying to make sure our checklist and our workflow for consistency, right? How make sure that you're actually entitled, right? There are some made the payment after the suspension period, then you may not be entitled to the refund. So put in your documents, go with your computation, and then look at your deadline. So see, are we entitled to the money? Are we not? Calculate are we looking at 8750 or 1650, right? And again, there's two different kind of prompts, so we're going to go through that people are using to calculate the benefit, right? This class is just my way of remembering it in my head. There's nothing statutory or in anything you've seen by the IRS other than my writing style here. Conservative is just based on what I think the plain language of 7508A and Kwong say. Standard is looking at the cross-reference to 7508A, A2. Protective is where, again, no judicial report. It just says when the statute says no penalty, I don't see the no penalty necessarily being connected to the failure to pay tax. So that any penalty in the period is open. That's the controversial part of this. We don't have any cases on it. This is solely based on my perception of plain language, but there are other commentators who've written the same thing. So I call that, your protective, your aggressive thing. asking for penalties that are not related to the failure to pay the tax, right? The theory being that during COVID, we were relieved from the obligation to pay the tax at that time, that the COVID suspension suspended the obligation to pay the tax until the end of the disaster period. And at that point, interest starts running again. What we've written in, and the option is that statutes is all penalties, so that perhaps the claim includes all of the penalties that were assessed during the qualified period. That's the primary difference between the calculation that you're seeing that in my conservative tier and standard textual tier and my protective tier. All right. So counter arguments that the IRS will make. They've said the IRS has never used administrative discretion to provide relief from interest that would otherwise be imposed by statute. So that is where the government's going to say that that is not how we've ever used 7508A. Also, they're going to say, to the extent that we're saying all interest is suspended during that time, as opposed to interest that accrued on taxes that accrued during that time, you should expect pushback on the statute. In CDP, they're going to argue that we've had prior opportunities, because they always argue for prior opportunities. But continuation penalties on that accrued during the period, they will argue that the continuation penalty is not a failure to pay penalty, and that the 6662 penalty is a percentage of the underpayment. It is not a time-based failure to pay penalty. So those are the arguments that we anticipate the IRS will be making. Again, pre-disaster delinquencies survive. So if a taxpayer owed money or owed penalty and interest prior to January 20th, 2020, we do not believe that Abdo and Kwong address those pre-disaster delinquencies. Right? That is not universal. But our contention is that the reg only deals with the post January 20th, 2020 penalties and interest. Again, that's consistent with the example in the reg. Cash bonds, again, you can deposit the cash bond to allocate for the period after the delinquency. So you can fight for this refund claim without having to full pay it. What you lose is your CDP rights. Except there is one case, Faisal Ahmed in the Third Circuit, that suggests that a cash bond may not eliminate your CDP rights. Right. So how do we use an AI program to do this? Before we start, I know a lot of people hate AI, that say that AI hallucinates. If you're not comfortable with it, and you're not going to stress test it, double check it against another one, then don't use it. Right? Well, I put out, this is a free prompt to make life easier for some people, or to double check the work. But the articles have a prompt. The articles are the prompt. So the law and everything that we're basing it on is programmed in to your AI program. So now you're going to start. You're going to get your transcript of the account. You're going to download that. I actually download the full THS report for the period. Right? So I use THS. It's got every payment that was made. It's got the record of account. It's got the transcript of the account. I put that all in. I also update the articles of the prompt. So the articles have prompts in them. I upload the entire article. Say, compute and prepare do the computation and then prepare the 843s based on the article. I've tested this with Claude, Chat, Gemini. I think we also have now tested it with, there's a tax software program called Accordance, which again, I highly recommend. I love Accordance. And it produced the same answers as, oh, and there's another one that's actually working really well. There's something called Perplexity Computer. It's the upgraded version of Perplexity. And it also does a very good job at this. Redact your social security numbers. If you don't know if yours is a private AI, you know, there's all these ethical things. Don't put PII on your chat programs. Then cross-check your AI output against the transcript, because technical difficulties, so we're taking a
No.
not a great break, but trying to fix things. It's like watching the news on TV.
Yes, we know sound 500 people sound. Go.
Okay.
Thank you. Thank you.
So always double check the AI output against the actual transcript account to eliminate your OCR errors. I mean, that's not hallucination. That's a problem with the people operating the system. Okay? You need clear OCR transcripts. And again, you sign the 843, you have the Circular 230 responsibility. If you're going aggressive, understand what you're asking for. Don't just say every penalty. That's my aggressive position. There are penalties, and then you don't want the taxpayer getting asserted a penalty when you're trying to get them a refund. Never sign an AI-generated claim without manual verification. It is a tool. You're not going to pick a homeless person off the street to do your AI claim, to do your claim. And again, beware of privacy. I mean, unless you have AI programs, and like most of us do at this point, that don't train on other people's data, that don't share the information, that keep it private, be careful. And that's where you're seeing these ethics opinions. All right, your state level claims, New Jersey does not independently permit penalty abatement, but you still file the interest abatement, not your penalty abatement. So, but you still file concurrently. There is a 906 process. And you're going to ask for waivers based on reasonable cause. New York may follow the federal treatment, but conformity is not automatic. So you're going to file your New York claims separately and monitor New York State for your guidance on your 7508 days. Again, state claims, we're using the federal timelines, but you don't know. But you would assume that you're going to do not ask for, don't rely on things like the notice of federal change statute that if feds give you a refund, that you're going to get the refund from the state. We file independently. While the computer is doing them, it's not a big deal to do the federal and the state at the same time. I've noticed that some of the other software programs that I'm recommending don't do the state at the same time. So if you're going to use one of those other programs, you're going to need to independently arrange for filing the states. Right? Then these are the checklists. We're going to go to CDP. Nothing that's different from what we're ordinarily doing. Was there a statute, a notice of deficiency? or notice of determination issued for the year. Was the 843 considered by appeals already, right? Then you're going to argue for verification. So in one of the denials, they said we didn't list it as a verification claim in the request for the CDP. One, theoretically, based on Hoyle, it is the appeals officer's, settlement officer's unilateral obligation to assert verification, to verify that all rules and regulations were followed. But now we just added, and I've given you in the articles, I believe, boilerplate language to assert that the Kwong-based claims as verification claims, and to argue that the IRS failed to comply with 7508AD, and that is verification, and that you get de novo review. We also request in these cases, belt and suspenders, file your separate interest abatement claim under the IRM, because that doesn't have the prior opportunity bar, and let everyone else know in the process that there are parallel filings, and that you would hope that the IRS could accommodate a request for one-stop shopping, that the appeals office consider all of them together. Right? So the articles that are out is Article 1 is basically describe the law, the statute, where we are. 2, computing the periods and the prompts for how to do it with AI. 3, what's aggressive, the penalties that are out there. And Article 4 went along with this article, I think, with slide deck. John, we sent Article 4 with the slide deck out.
I don't know this one.
Yes.
I can find out right now.
Okay. And everything it gets posted to our LinkedIn page, our Facebook page, and the Google group. So all of this is available to you, and there will be another outline that answers your FAQs that will be posted on LinkedIn, Facebook, and the Google group after this seminar. So I did the AI how to compute
Article 4, version 6.
Yep. Okay. Then I've got the prompt. We've asked for what the prompt says. You're a tax computation assistant. I'm giving you the transcript. Compute the 3 amounts that are out there. The other products that are out there and how to contact them. Tax refunds AI. That's a fixed fee. It's in English and in Spanish. Penalty back, 100% contingency, interest, and in Spanish, and it's got an affiliate program for firms. Tax help software, THS, great reports. We just take those reports and we scan them in to the AI program with the prompts. There are others, and the next set of slides has more programs, because I didn't finish testing some of the programs before finishing the slides for today. Then even an old program like tax interest software, you can prepare the Kwong claims, right? You go into tax value, right? You put in the tax type, you put in the payments, you run the regular IRS computation, right? Then the way you run the Kwong adjusted computation is you exclude the disaster days, right? And then the difference between the two, the regular versus the tax interest penalty comp without the interest for those 1,268 days, is the refund amount. So you don't need the fancy AI programs. And if you are comfortable with using software like tax interest or time value to do the computations for you. Again, a little tricky with what we call the interrelated computations of the interest on the interest. You always got to double check it. But even when I use like a tax interest for one, I'm going to double check it with an AI program for another, just to make sure that you're getting that. You know, you've hit pay dirt that when the two programs give you the same number, right? That makes you feel very happy. Then they're not both necessarily right or wrong, but at least they're in agreement. Again, I haven't been able to get, and I will try to get you information about whether or not you have to join a class, opt in or opt out. I think there people may be automatically in, but there are class actions. You can free to just contact the attorneys that have started the class action. But who should consider joining? My gut in reading is these are going to be tough. Every person in the class can be limited by the little Tucker Act to 10,000. And you may, again, people who are litigating these cases, feel free to email me if I'm wrong in my reading of it. So if your claims are more than 10,000, then you don't really, you may not be advantaged by filing or joining the class. Maybe you should file it individually. Again, corporations, our claims are bigger and complex fact patterns. I'm not recommending that you join the class action, but whatever you do, do it by the deadlines. All right. So then when I wrote this, it was 83 days remaining. All right, John, can you bring up the second slide?
I don't have to give you the email. I want
This one. Okay.
I
was the one that-
I don't want 2 slides.
It's only also not small. Yeah.
I didn't get it. I'm pretty sure I didn't get it. I looked.
When you sent that one,
But yes.
I forwarded you the PDF, Joe.
Sure.
We're going to take another 2-minute break. Well, how much time do we have left for something?
You have a half hour.
Oh, good. That's what I need. All right. Are there any questions from home I should answer while we're doing this?
Any.
Oh.
So you want to put questions up, Listen? Yeah, why don't you put some up, Listen?
Oh, they're up.
Oh, it didn't go on your screen?
On my screen.
Are all penalties and interest assessed between January 2020 and July 2023 subject to abatement and refunds?
That's the difference between the conservative and the aggressive. So what isn't in dispute is that failure to pay penalties and interest relating to failure to pay are within the 7508A abatement. The argument that isn't there, what we call the aggressive computation, is all of the other penalties that you see assessed within the qualified period. So that's the primary difference between what we call the standard and the aggressive computation. Next question. They include, so the question from home is, do these penalties and interest include all taxes or only income taxes? For example, payroll taxes. Yeah, no, 940s and 941s are included in this. I mean, the statute talks about taxes. Next question. Why July 10th? I haven't looked at the California FEMA declaration. I'll follow that up. That is discussed in Article 1, and I get tongue-tied when I explain the why July 10th, but I'm sure that the July 10th is correct. What about the case of an ongoing IRS audit in which additional tax and interest may be imposed after the July 10th deadline during the suspension period? You know, that is actually still what I think is one of the open questions, because how do you get it? You haven't paid it yet, but it says no penalty and during that period. So I think we agree that the interest on the tax that accrues during that period are subject to the suspension. But there's not the penalties, they're up in the air because it's failure to pay penalties and the negligence, the overvaluation, all of those may or may not be covered. The aggressive computation, when we do it, asks for that, and we say that it says, no penalties, and we use no penalties on an accrual basis.
Hey, let's take that down because we've got the other deck. This one you want to write?
Yep.
Let's get it. Oh, that is touch screen.
Okay.
Oh, good.
So what happened? This is a prior update of a prior deck, and what we did is we stress tested the vendor claims. Right, we tried to test the vendor claims. So we kind of tried to stress test them. And again, there was some proofreading errors about what the right interest rate was in prior periods. So this is based on your comments to what we posted on LinkedIn. So one of the things you want to know is exactly what codes should you be looking for. And this first slide deals with the codes that I believe should be either on a standard or aggressive abatement. Right? Your 150s, your 290s, your 300s, your failure to file penalties, your failure to pay penalties, your interest on penalties. I put in your collection fees, the payments and credits, and then I'd say always look at and exclude the amounts from the 161 because that's an abatement. So you can't ask for a refund of money that they've already abated the penalty. So again, and we're not sure that this is going to work, but we have a case where we're arguing that the interest on the restitution-based assessments is also suspended. So if you are representing someone who was criminally convicted, that is not on an account transcript. So you have to also order the 1040 separate assessment transcript. You're going to see separate assessment transcripts on your innocent spouse cases, right? When they separate the two accounts, you're going to see them on your restitution cases. There are a number of cases where you have to get not only the original 1040 transcript, but the separate assessment transcript because you're not going to see the penalties on the standard account transcript, right? And this doesn't cover, even though I put in the 290 and the 300 codes, what we call the non-master file transcripts, and those you have to get under the Freedom of Information Act. We don't get them electronically. So again, what is your steps? First, where is your underpayment? Get your timeline, calculate your normal interest, compute the interest adjustment. That helps you calculate the suspension method. That is what the AI program is trying to replicate, what we would do if we were doing a manual computation. An example, how much are we talking and what are the differences between the different? So you take a $200,000 underpayment. So there's no suspension, right? Your taxpayer would have accrued interest and penalties. So on that $200,000 that wasn't paid in 2019, he now owes $148,000. If you get the Kwong interest suspension, you could get a interest reduction of $61,182. And under our more aggressive one, because it also wipes out the penalties, it's a much bigger amount. Again, if the government is going to object to anything other than the standard penalties. The errors that the manual computation makes, and that's just going to be the interest on the interest. That's why you've got to be careful when you do a manual computation. The theory is right. Compute your regular interest. You compute your amount due with the suspension, which removes the interest on the interest and the interest on the penalty. And the difference between the two is the refund. It's just a question of doing the calculation, and that when you use the manual method with the time value and the tax interest, you need to be very careful to make sure that you calculated the suspension benefit correctly. What does Treasury agree with? I mean, they agree with the declaration ending date. They agree with the interest now and the penalties on the interest on the penalties. We don't know if they're going to appeal yet. Then there is a change after December 25th, December 2025. So you've got your slide of what's different. The difference isn't important for making these claims. How you do the interrelated computation is covered. Why the tax prompt was designed to work, because it does exactly what you do when you're doing the manual prompts. It starts with your inputs, your account transcripts, your tax. It then decides which transcripts are, which transcript codes are available for the suspension benefit. It calculates the interest, it calculates the Kwong adjusted, and then it calculates the difference between the two, and then it compares the regular and difference between the two. And the time difference. To do it by hand, which I call the manual assisted one, probably takes 2 to 4 hours per file. The AI assisted one takes 10 to 20 minutes, because you're not going back and forth and verifying. Again, the conservative, standard, and protected, that is arbitrary. That's just me in the 3 ways I would do the computations and how I would litigate those cases. There is nothing that in the literature that you're going to find to say that verifies that there is a conservative, standard, or protected. So far, what we've looked at: tax help software, easily tax refunds, tax advisor 360. That's the one that Reddick had recommended. IRS solutions, also reputable, using time value, my prompt, tax GPT. Okay. Again, I do not recommend any one program over another. If you learn a program and you're comfortable with it, you're fine, right? If you want to farm it out easily, especially for a small claim, a client pays a fixed fee, gets everything done for them, very little to do, that's fine. Or what's the other one? The other one's not in here. The other one that was in the other outline is pure contingency. Okay, now this is the next few slides are what each of the programs do and how they do it, right? Tax help software excels because it gets you the transcripts and it prepares those really nice reports. And they've been around forever. I've used them since the beginning. They've downloaded 1.5 billion transcripts. Can't say enough about it. Easily is Alyssa Watley's that it's brand new. She wrote it for this. Really looks like a very elegant program. It does one thing, this quant calculation. Your client is paying for this one calculation and preparing the 843s. So it's not your all-purpose software. You're only buying it for this client, or the client's going to pay for that directly. Tax Advisor is a program that does all tax controversies, right? It's an AI program. You put in your problem, and it essentially will draft what it thinks you need, right? Developed by someone, Sterling Cunningham, who worked as a developer for the IRS for 24 years. So you could blame him for the IRS software, or you could take advantage of what he knows about the IRS software. Again, this is, if Chuck Reddick recommends something, it means a lot. IRS Solutions, again, I think it's trying to become a competitor to tax help software. Time value of interest is something that we've all had in our toolbox forever. They are verification tools, and as my practice pointer is, you need to verify. No matter what you use, you're going to need a second program to verify. So if these programs aren't your first look programs, they should be your backup verification stress test programs. Right? And then what we've done is try to walk through the steps, because most of you who have time value and tax interest don't want to buy another program. These are the steps to use what you already have in your shop to run these calculations. Again, just because you have it in your shop doesn't mean it's going to be the right tool. If you're doing volume, if you looked at the time, you're going to do this. It's going to give you the right answer. It's going to be 2 to 4 hours versus doing it with one of these programs that takes the information from the calculation and the transcript and writes your 843 for you as well. Again, Tax Tools also is another program that we've used. A lot of people use. You can make Tax Tools run a quant calculation for you. Again, by doing what I've said on the manuals. IRScalculators.com can be made to do it. Again, this one manual, and Drake is also now able to do it. Limitations that we've tried to write the AI program that we've recommended to be used on any AI program, but we've only tested it on Claude, ChatGPT, Gemini, Accordance, and I didn't think, we've tested it on BlueJ as well, but I'm not finished saying that it can be stress tested and always gets the same answers as the others. Yeah. You've got a comparison matrix when you use, what are you looking for in a program? What are you looking for in terms of volume? I've tried to compare. Again, this is not any publication. This is me playing with a program, saying, will it do this for you? Does it make your life better? I'm not an expert in the program. So those of you who wrote the programs, if there's something that I missed in doing it, that no, the program actually does it, and I put down that no, it doesn't, I'll correct it. Workflow, again, I probably added a little bit to the workflow, but you've got to figure out a workflow that works for you for volume and taxpayer bill of rights. At the end of the day, we're looking at the right to pay no more than the correct tax, the right to a fair and just system. We should not be penalized for not paying tax during the time when Congress suspended the obligation to pay tax. We should not pay interest on the money that was due during that time. So essentially, if we paid the correct tax on the last day of the suspension period, the answer should be 0. And that's the basis of the aggressive calculation, right? That Congress meant to give even the honest taxpayer who could pay a break and to keep that cash flow in the economy so that the United States did not grind to a halt during COVID. That's not in the statute. That's our basis and our reasonable basis on, we believe that the plain language of the statute supports the aggressive computation and that the purpose of declaring a disaster area to help all taxpayers is accomplished by the aggressive abatement of penalties that were accrued on taxes during the suspension period. Assume that you paid everything the day after the period. I try to remind you, notwithstanding the fact that I am proposing aggressive and I'm going to put it down, that there are penalty potentials. There is a 20% penalty on erroneous refund claims lacking reasonable basis. So explain, disclose, do not hide anything on your claims. There are there were questions about why can firms be charging contingent fees on these wrong claims, and that Circular 230 and state bar rules do restrict contingent fees on original returns, but refund claims have not been subject to that. So you would look at your jurisdiction, but I don't believe there is a prohibition on getting a contingent fee on these claims. And that's why you have these programs that are out there that are getting a fixed fee. Some I didn't list, right? But because there are a number of programs that are taking a fixed fee for preparing on paperwork and then a contingent fee on the administrative part of the case, and then a bigger contingency if the case has to be litigated. So there are lots of fee options out there, and as long as they don't rise to the level of an unconscionable fee, there doesn't appear to be any prohibition or absolute prohibition on taking the contingent fee in this area. Right? So manual computation, AI computation and manual computations, you're going to make a mistake. You got to double check. Right? So there is different rates there, and you have to make sure that you're covering the rates. There's cascading interest and penalties. There are abatements that happened automatically. So you've got the AI does do the interrelated calculations simultaneously, but what codes you put in to the AI could result in an error. I've recommended certain codes. I didn't write, I'm not the law. I'm not the judge who's going to be deciding these cases. So you use the articles and you use these slides at your own risk. Read it yourself. If you disagree with anything, you can send me an email and I will tell you why I believe one way or another. But you're signing these documents, they're your documents. There's also going to be litigation going on. No AI tool replaces practitioner judgment. right? What do they say? No plan survives contact with the enemy. We may believe we're right, but we'll go to court. And things could change. The good thing is that these cases are going to move fast. And you've got a class action out there. You've got litigation in 3 courts right now, as I know it, the Court of Federal Claims, the district courts, the tax court. So I anticipate that we're going to be getting a lot of guidance pretty quickly. And that the deadline is there. Or at least those who are going to go past the deadline, they're going to hopefully litigate for all of us. And I'll write your congressman. The date's coming up too fast. We don't have enough guidance from the courts. Either we all have to flood the IRS, which probably doesn't need that right now, or Congress, by statute, extends the deadline. So the call to action is to write to your elected representatives. And we can all agree that sometimes a pause is the right answer for everyone. So maybe 120-day pause, 180-day pause on filing these claims is the right answer till we all get more guidance from the courts. I believe that is something that if you write the Taxpayer Advocate Service and you write the judges, that it is within, not the judges, your legislators, it's within the art of the doable. So I think I've done everything that I wanted to do today.